Hey there, fellow economists. Today we're diving into the roller coaster ride of the US dollar, pinpointing key moments of weakness throughout history. Let's get started. First up, 1971 to 1973. The Nixon shocks and the end of the gold standard. In 1971, President Richard Nixon ended the Bretton Woods system, severing the dollar's direct link to gold. This shift to a floating fiat currency led to a sharp devaluation against major currencies like the Deutsche Mark and Japanese yen. Next, the late 1970s to early 1980s, high inflation and the oil crisis. Stagflation, with rampant inflation and stagnant growth coupled with soaring oil prices, dealt a blow to the dollar. The Federal Reserve, under Paul Volcker, had to hike interest rates aggressively to tame inflation, which did eventually strengthen the dollar, but not before it suffered significant declines. Then came 1985 to 1987, the Plaza Accord and intentional dollar decline. The US, Japan, Germany, France and the UK signed the Plaza Accord to weaken the dollar and correct trade imbalances. The dollar lost around 50% of its value against the yen and Deutsche Mark during this period. Fast forward to the early 2000s, the dot-com crash and Fed rate cuts. After the dot-com bubble burst, aggressive rate cuts by the Federal Reserve made the dollar less attractive, causing a decline against the euro, which jumped from 85 cents in 2000 to over $1.60 by 2008. Next, 2007 to 2011, the global financial crisis and QE policies. The 2008 crisis led to massive quantitative easing by the Fed, flooding markets with liquidity and pushing the dollar down. Alternatives like gold and Bitcoin saw significant rises. Finally, 2020 to the present. The COVID-19 pandemic and monetary easing. The Fed's massive QE and rate cuts in response to the pandemic initially weakened the dollar as investors turned to riskier assets. However, starting in 2022, the Fed's aggressive rate hikes have strengthened the dollar again, though recent trends show signs of potential weakening. And that's a quick tour of the US dollar's moments of weakness. Thanks for tuning in, and until next time, keep analyzing those trends.